going to call our meeting to order and welcome everyone that's here and remote. And to find out where we are, we're going to call the roll and see who all we have on remote and who we have here. Pretty easy to tell who's here, but we will, Rich, if you can call the roll.
Good morning. Chairman Representative Jim Kelly is present. Vice Chair Representative Nick Hoheisel is present. Ranking Minority Member Representative Shu is planning to be present. He's remote.
I'm here.
Okay, very good. Representative Anderson.
Present.
He is? Okay. Representative Baker is present and he's remote. Representative Bergkamp.
Present.
Thank you. Representative Day is present. Representative Donahoe. I understood he was going to be remote. Representative Finney.
Present.
Thank you. Representative Kessler is here. Representative Lynn is here. Representative Neely. I see that he's up there. He's present. He's remote. Representative Poskin.
Present.
Thank you. Representative Samsel is present. Remote. Representative Topliker is present. He's remote. Representative Wassinger is present. She is remote. I saw her earlier. And Representative Weigel. That's it for the members, Mr. Chairman.
Thank you, Rich. And a couple things that want to state first is that we now know that our seating, so this is for those that are here and for those that are remote, that when we're back and we're all in person, our seating is going to remain the way that it is. So we're going to need to use this room 218 and the room 212 to the north of us. And so we have Representative Day volunteered to sit in the room, and she's the only volunteer so far. But if anyone else would like to volunteer to sit in 212, and the connections are really good with the WebEx, and you can hear well in room 212. Please let Rich know, and if not, our seats will be assigned when we meet again Wednesday, and we'll do it on a random basis to put assign, I think, Representative Day and 5 others into room 212. So we will do that. And the next item that we have is a request for bill introductions. Are there any bill introductions? Not seeing or hearing any. This will be on the agenda every time. So we'll be able to have those as we go. And I'm aware of a couple others that will be coming. So we'll expect those. And then for all of our new members, not necessarily new, but new to the legislature and new members to the committee, what we hope and want to accomplish in our hearing today is to be able to we're going to hear House Bill 2069. So with the testimony that you received that came, there's two places. It's out on the website, and the testimony is under our committee, and then it has the testimony available. You also received an email with the testimony in it, and the reason we did that is that our committee assistant, Rich, found out then when you upload it to the website, he uploaded it in the order of who would speak, but it doesn't end up that way on the website. It ends up random. So if you go there, you'd be going back and forth. So in the email that you received from him this morning, it has all the testimony and it's in the order that it'll be presented. So felt that that's easier, but the testimony is out there on the website for the public and for everyone else. So it is there, it's just not in the order that it's going to be presented. So what we want to do is with the testimony and and those that are proponents, opponents, and neutrals that will talk today, you will have a chance to ask them questions if you have want to know something else about what they've presented, or if you have something that you're uncertain about, you'll be able to ask questions, and you will be able to, in between this meeting and when we, what we call work the bill, or when we go through and look at it and see, is it the way we want it? Are there some potential changes that need to be made? Whatever, that you'll have a chance to really read through again the testimony and be able to kind of take it along with any notes that you took and be in a position to for us to then decide what the committee wants to do with the bill, which we can keep it in the committee, we can pass it out to the whole House, and then it would eventually work its way up above the line, we hope. It could sit below the line, but for a long time. But we hope that it'll work its way up because we hope we have a bill that is in a form that it meets, is taking care of the unintended consequences and has all the questions answered. So that's what we hope to do in our presentations today and the questions. And we're going to begin today with a presentation by our research, head research committee staff, Melissa Rennick, and she's going to go through. Now, the one thing about the bill that we're talking about today, this bill actually is one that went through the legislature last year with a different number, but it went through and it passed the House 114-3. It passed the Senate 29-11. And then it was vetoed by the governor right at the end, and there wasn't, we had adjourned and there wasn't a chance to override the veto. So this is a return of that bill. Last year it was House Bill 2619. This year it's 2069, and it's exactly the same as what passed last year. So Melissa is going to present kind of an overview of this bill as it was in the 2019-20 sessions and then as it is today, and kind of tell a little bit of its journey. So Melissa, if you could please fill us in, and I think you received a packet from Legislative Research. And what Melissa is going to really talk about today is on pages 6 through 9 of that packet, and the rest of it is information that you can kind of look through, and we will discuss at a future meeting when we come up with some issues. But Melissa, please take it away.
Thank you, Chairman Kelly and committee members. As you mentioned, there is a memorandum available in your files entitled the Kansas Financial Institutions Privilege Tax. This was a tax that was first effective on January 1st, 1964, and imposed on banks, savings and loan associations, and trust companies for the privilege of doing business within the state. And as the chairman mentioned, we'll visit with pages 6 through 9 of this memorandum, and the rest of the information is submitted for your reading leisure later. And 2021 House Bill 2069, which will be reviewed next by the committee's revisor, reflects the development of legislation relating to financial institutions in Kansas. This began first in 2019 with the bills pertaining to the privilege tax, and then evolved to a much larger bill that encompassed the privilege tax, field of membership modifications in the state credit union code, and a new linked deposit program that utilized financial institutions as a support to economic recovery. So let's begin first with the 2019 Interim Special Committee on Financial Institutions and Insurance. The Legislative Coordinating Council created the special committee to study, among its assigned topics, the privilege tax. The committee was directed to conduct hearings on 2019 Senate Bill 238 and 2019 Senate Bill 239. Both bills were introduced late in the 2019 session on April 5th, 2019 by the Senate Committee on Assessment and Taxation, and re-referred to the Senate Committee on Financial Institutions and Insurance, which had completed its meetings for the year. And so its chairperson requested an interim study. The special committee held a combined hearing on both bills and received comment from proponents and opponents to the legislation, as well as fiscal information provided by KLRD and representatives of the Department of Revenue. Following hearing and discussion, the committee made no recommendations on Senate Bill 238 and did not recommend Senate Bill 239 for consideration by the 2020 legislature. In the memorandum, you'll see a description of the two bills follows. Senate Bill 238 would have permitted those institutions subject to the privilege tax to deduct from net income the interest received from business loans to the extent such interest is included in the Kansas taxable income of a corporation. Throughout each of these bills, it's important to note the definition of business. It changes in the various versions of the bills. In this bill, it meant any entity that operated primarily for commercial or agricultural purposes and is not an individual obtaining a loan or primarily for personal, family, or household purposes. Senate Bill 239, which was not recommended to be advanced for consideration by the 2020 legislature, would have imposed a privilege tax on those state credit unions that were located or doing business within Kansas that had assets equal to or exceeding $100 million. The tax would have been measured by the credit union's net income attributable to interest income it had received from all business loans from the preceding year. Moving forward to the 2020 session, the report from the special committee was received in the two legislative committees overseeing financial institutions legislation. Ultimately, the provisions pertaining to the privilege tax and other financial institutions topics, including field of membership for the state chartered credit unions, were included in 2020 Senate sub for House Bill 2619. And the memo then illustrates the consideration of the privilege tax legislation during this session. Substitute for 239, Senate Bill 259, and Senate sub for House Bill 2054 all reflect the expansion of the financial institution subject matter to include amendments to field of membership requirements placed on state chartered credit unions to increase the permissible geographic area for credit unions' field of membership. In addition, substitute for Senate Bill 238 and Senate Bill 259 would have permitted those financial institutions subject to the privilege tax for all taxable years commencing after December 31st, 2019, to deduct from net income the net interest received from business loans attributed to Kansas and the net interest income received from single-family residence loans to the extent such interest is included in the Kansas taxable income of a corporation. Senate sub for House Bill 2054, the Senate committee on March 13th, 2020 removed the contents of this bill and recommended a substitute bill which incorporates provisions of sub for 238. Prior to inserting this language pertaining to the privileged tax and financial institutions, the Senate committee amended the provisions pertaining to the privilege tax to modify again the definition of business by limiting those loans to entities operating primarily for agricultural purposes. The Senate voted to send the bill to the House for its consideration of Senate amendments on March 16, 2020, with a vote of 29-5 on emergency final action. The legislature adjourned on March 19th, weeks ahead of its intended first adjournment in time allocated for its veto session. So prior to sine die, certain legislative committees were permitted to meet and address potential legislation for consideration on sine die, May 21st. And this is the bill that Chairman Kelly referenced. The Senate sub for House Bill 2619 was created during this time. It would enact law to establish the Kansas Economic Recovery Loan Deposit Program, would have amended the law governing linked deposit programs and related investment procedures, would have amended field and membership requirements placed on state chartered credit unions, and would have permitted the net income deduction, which would now apply to taxable years commencing after December 31st, 2021, and the net interest income received from qualified agricultural real estate loans, and the net interest income received from single-family residence loans to the extent such income is included in the Kansas taxable income of a corporation. And you'll see detailed there in the sub 2 bullets, the history then. On May 15th, the Senate committee was convened to consider possible action on bills previously heard and to consider a new economic recovery initiative. At its meeting, the committee received an overview and testimony on the initiative and then discussed House Bill 2619, which was a bill from the Financial Institutions and Pensions Committee, and at the time related to the frequency and an actuarial experience and cost study that was conducted by CAPERS. They took action on the bill, recommending the deletion of the contents of the bill in this substitute bill, which incorporates the provisions of Senate sub for House Bill 2054, with new language added pertaining to the linked deposit program for economic recovery. On May 29th, the House Committee on Financial Institutions and Pensions received an overview of this proposal that had been advanced by the Senate and was considered on May 21st during the sine die session. And the chairman mentioned this legislation was vetoed following its successful passage in both the House and Senate. The final item to review today is the Special Committee on Economic Recovery. And the LCC created this special committee and directed it to study state policies and make recommendations to the legislature concerning the Kansas economic recovery from the COVID-19 pandemic in several key areas. The committee received testimony on a variety of topics, including the impact of the pandemic on the financial services sector and comment from community banks. Among its recommendations to the 2021 legislature, the special committee recommended the state enact the provisions of 2020 Senate sub for House Bill 2619, providing for a low-interest linked deposit program using up to $60 million of state idle funds to invest back into Kansas communities and provide for a tax exemption for agricultural real estate and rural housing loans, in addition to other financial institutions provisions. Mr. Chairman, that concludes a review of the 2019-2020 biennium and how the bill advanced to becoming a bill about financial institutions, including the assessment of the privilege tax with a net interest income deduction, the credit union field of membership provisions, and the new economic recovery related linked deposit program. I'm happy to stand for questions at the appropriate time.
Melissa, and does anyone have any questions? Melissa? No hands are up, so thank you, Melissa. Our next item is on the bill that we're going to hear today. I would like to have our reviser and David. You can see David up on the screen there, but if you could please tell us what this bill does, David.
Yes, thank you, Mr. Chairman. Good morning. Can everybody hear me okay?
Yes, you're loud and clear.
All right, great. Yes, House Bill 2069, as the chair and Melissa indicated, is a reintroduction of the bill, substitute for House Bill 2619 from the 2020 session, really just with the only update being the tax year in which the privilege tax deduction would occur. That would be tax year commencing after December 31, 2022. Otherwise, the provisions are as they were in the bill from the 2020 session. So House Bill 2069 would enact the Kansas Economic Recovery Loan Deposit Program, update field and membership requirements for credit unions, and allow privilege tax deductions on agricultural real estate loans and single-family residence loans for those financial institutions that are subject to the privilege tax. The first part here, all these new sections 1 through 7, are the sections that would create the Kansas Economic Recovery Loan Deposit Program. Section 1 is the definition, provides a citation. New section 2 provides definitions that would be used in the program. Just point out a few there: economic recovery loan deposit, economic loan recovery loan deposit loan or loan. And then I would also, I didn't put this in the brief, but I would point out the definition of eligible lending institution can be a bank, credit union, or a farm credit institution. So it could be any of those three could receive deposits under the program. Section 3 provides for the state treasurer to be the administrator of the Economic Recovery Loan Deposit Program, and sets the total aggregate amount of economic recovery loan deposits at a maximum of $60 million of unencumbered state funds. This section also authorizes state treasurer to adopt rules and regulations necessary to administer the program, and it also requires the state treasurer to submit a report on January 1st of each year and annually thereafter to the governor and the legislature, identifying the eligible lending institutions, eligible borrowers participating in the program, and the aggregate total of monies loaned and monies available to loan if there are any. New section 4 provides for the eligible lending institutions application process for eligible borrowers and requirements for those particular loans. Eligible lending institutions are required to apply all their usual lending standards for credit worthiness, and an eligible borrower may only have one outstanding economic recovery loan deposit loan out at any one time. The maximum of these loans would be $250,000, and no such loan may be amortized for more than 10 years. An eligible lending institution forwards an approved economic recovery loan deposit loan package to the state treasurer along with any additional information that the treasurer may require. New section 5 of the bill specifies the process for the loan package. Once it actually gets to the state treasurer, the treasurer may accept or reject the package based on the treasurer's evaluation of whether or not the loan to the borrower meets the requirements of the program. If there are not sufficient funds for the deposit loan, then applications may be considered in the order in which they were received, sort of a first come, first served basis once funds become available, subject to review by that eligible lending institution. Upon acceptance of the package, the state treasurer would certify to the director of investments the amount required for the loan package. Then the director of investments would transfer that certified amount to the eligible lending institution at an interest rate that is 2% below the market rate provided, and then such interest rate would be recalculated annually on the first business day of January using the market rate in effect. The minimum interest would be at 0.25% if the market rate was below the 2.25%. So it'd be at least a minimum 0.25% rate. An eligible lending institution would be required to enter into a economic recovery loan deposit agreement with the treasurer. The agreement would include requirements necessary to implement the program, including an agreement by the eligible lending institution to lend an amount equal to the loan deposit to eligible borrowers at an interest rate not more than 3% greater than the interest rate made available to the lending institution to be recalculated on an annual basis. The loan agreement also includes provisions for the loan deposit to be placed for an annually renewable 1-year maturity up to a period of 10 years, and would also require the agreement to include provisions for the reduction of the loan deposit in an amount equal to any payment of loan principal by the borrower. Moving on to Section 6, this requires the eligible lending institution to fund the loan to each approved borrower listed in the economic recovery loan deposit package in accordance with the agreement between the state treasurer and the lending institution. This section stipulates that the loan to the eligible lending institution would be made at the rate established in Section 5, that again, that market rate discounted 2%. New Section 7 provides that neither the state nor the treasurer would be liable to a lending institution for payment of the principal or interest in the economic recovery loan deposit loan to the borrower. The state section also states that the eligible lending institution is ultimately responsible for any delay in payments or if there's a default on the part of the borrower. So those are the new sections, and then also Section 9 of the bill amends KSA 754237. This is the investment estate monies statute. So this just amends that to include the to add loan deposits made under the Kansas Economic Recovery Loan Deposit Program, and includes the interest rate calculation. So that is the loan deposit program portion of the bill. Section 8 begins the second kind of policy piece here, and this is the credit union membership. This would be an amendment to KSA 172205. Under current law, credit union members must share one or more common bonds of membership. And those could either be occupational, associational, or geographic. Under current law, geographic area is permitted to include a single political jurisdiction or multiple contiguous political jurisdictions until the aggregate total population of the geographic area, which is 500,000. The law further provides, however, if the headquarters of the credit union is located within a metropolitan statistical area of more than one county, a different maximum population limit would apply. And then that is determined by a particular formula. So what the bill with 2069 would do would amend that geographic criteria to increase the permitted maximum from 500,000 to 2.5 million as determined by official state population figures through the U.S. Census Bureau. And then also remove language that's separately applied to credit unions with headquarters located within the MSA. So that language is being removed. And then modify a requirement that provides from and after July 1, 2008, no geographic area shall consist of any congressional district or the entire state of Kansas. It would strike that date-related lead-in language, and then it would just simply say that the membership, no geographic area shall consist of the entire state of Kansas. So it's striking that congressional district. It just can't be the whole state of Kansas. And then there are also just kind of a technical kind of cleanup definitions of MSA, population data, and overact that were struck from the statute as they're no longer needed since that formula is being replaced. Section 10 then is sort of the third policy piece of the bill. This would amend KSA 791109 pertaining to the definition of net income and allowable deductions therefrom in the Kansas privilege tax. This amendment would create a deduction for those financial institutions subject to the tax for tax years commencing after December 31, 2022. And it would be a deduction of net interest income from certain qualified agricultural, real estate, and single-family residence loans from net income to the extent that such interest is included in Kansas taxable income of a corporation. There's some definitions added to the statute as well, including interest, what a qualified agricultural real estate would be defined as, single-family residence. That would have to be a principal residence of the occupant, would have to be located in Kansas in a rural area as defined by the United States Department of Agriculture. It has a population of 2,500 or less as determined by the most recent census, and is purchased or improved with the proceeds of a loan. And then there's also then definitions for net interest income received from qualified agricultural real estate loans attributed to Kansas, and then net interest income received from single-family residence loans attributed to Kansas. So that is the contents of 26 House Bill 2069, Mr. Chairman. I know I went through that rather quickly, so I'd be happy to stand for any questions at the appropriate time.
Thank you, David. Are there any questions for David? Probably a key thing in there that I think is worth noting, and it was in, I think, Section 7, where this is using funds that are coming out of idle funds, and the state has no obligation on losses. If there is a loss, it's the financial institution that takes the loss. So there's not a threat to any of these funds that are being used to help on this program. So if there's no other questions, we will then officially open the hearing on House Bill 2069, and we'll start with the proponents. And the first proponent that I have listed is Alex Orrell, Senior Vice President, Kansas Bankers Association. Welcome, Alex.
Good morning, Mr. Chairman. Can everybody hear me? Great. Can't believe we've made it 35 minutes so far this morning, and not yet we've heard a go Chiefs. So I'm going to go ahead and say it. How about them Chiefs? Good morning, Chairman Kelly, Vice Chairman Hoheisel, Ranking Member Shue, and members of the committee. Thank you for the opportunity today and speak in support of House Bill 2069. I am Alex Orrell, Senior Vice President of Government Relations with the Kansas Bankers Association. I also have with me Kathy Taylor, who's our Executive Vice President and General Counsel, and then in the other room, Kelly Van Zwal, who is a staff attorney and third member of our KBA Government Relations team with me today. Just wave through the door. Many of you already know who the Kansas Bankers Association is, but since this is broadcast virtually and there are many new members of this committee, I want to quickly go over the organization whom we represent for the record. The Kansas Bankers Association is one of the oldest bankers associations in our country. Organized in 1887, whose membership includes 98% of the 220 banks and savings and loans headquartered here in Kansas. Our membership also includes 19 out-of-state commercial banks operating in Kansas. The Kansas banking industry collectively employs more than 22,000 Kansans that provide financial services in every county across our state. It is an honor to represent them here today. Our organization's mission statement is simple, but has a powerful meaning. Together, we support our member banks and bankers with leadership, advocacy, and education to benefit the communities and customers they serve. We take that very seriously, and it is very similar to your commitment and dedication to serving your district's communities and constituents. I want to take this opportunity on behalf of the banking industry to thank you for your service and leadership during these trying times. You have a daunting task this legislative session to do the work on behalf of Kansans, and we here at the KBA wish you the absolute best of luck. HB 2069 is the counterpart of Senate Bill 15 that was heard last week in Senate Financial Institutions. So the committee also knows that the Senate Financial Institutions Committee plans to work Senate Bill 15 later this week. I appreciate Chairman Kelly's efforts in scheduling this hearing to make sure this committee is fully up to speed on this issue that was also around last year. Thank you to the revisers and research for their presentation this morning. I think that was very helpful for the committee to understand that there has been a lot of work put into this bill over the last 3 years. It has been vetted very strongly. There's been multiple hearings, and like I said, it has been around. HB 2069 is a straightforward piece of legislation and not a new concept like I just mentioned. This legislation is nearly identical to Senate substitute for HB 2069 that passed the Kansas House last year with a strong bipartisan support of 114-3 and 29-11 in the Senate. Now, I want to be clear, that second vote in the Senate of 29-11 was the second time the Senate voted on it. The first time it passed, it was 29-5 with bipartisan support. The second time was in sign and die session when there was a little bit of craziness going on and it was voted by partisan lines. But the first time this passed the Senate, it was bipartisan. So It did pass both chambers with strong bipartisan fashion. But it was unfortunately vetoed by Governor Kelly. And I will try and highlight her concerns at the time during my presentation today, too, so I can hopefully answer those questions. I know there are many new members on this committee, so the veterans, please bear with me as I go over this legislation in a little more detail. I do want to thank every single member of this committee that was served in the legislature last year for their support on this legislation last year. I hope they can consider supporting again, and I hope that your new colleagues will join as well, or at least consider this very important piece of legislation. HB 2069 will address some of the economic impact caused by COVID-19 by implementing long-term solutions that will promote business growth, stimulate job creation, and bring confidence back to rural and main streets alike. HB 2069 will revitalize rural Kansas communities, benefit all Main Street agricultural borrowers with competitive interest rates, and maintain local credit access across the entire state to help all Kansans. This bill will help provide low-cost credit in two ways. First, it will create a new linked deposit loan program through the Kansas State Treasurer's Office that will allow the state to partner with Kansas financial institutions to use dedicated state idle funds or reserves to deposit in participating financial institutions to provide low-interest loans to Kansas businesses. The $60 million used to fund this program would come from the Kansas Housing Linked Deposit Loan Program, which has not been utilized since 2014. I want to be clear, this is not a $60 million expenditure. The legislature had previously given the authority to the Treasurer's Office and the Pooled Money Investment Board, or the PMIB for short, of using $60 million in state idle funds to fund the housing program. I know you all know what the State Treasurer's Office is. Still, I want to give you a quick breakdown of who the PMIB is, since I believe that is very important due to some of the previous discussions last year and the governor's veto message that this would be better housed in the Department of Commerce. The Pooled Money Investment Board invests the money available for the state general fund and the hundreds of other state funds deposited with the state treasurer. The PMIB also provides investment management services for other state agencies with investment portfolios, such as the Kansas Department of Transportation and the Healthcare Stabilization Funds. The PMIB's responsibilities includes the management and administration of the Kansas Municipal Investment Pool, which provides an investment alternative for local government entities in Kansas. Also, the Pooled Money Investment Board is a governor-appointed board. I give you that background because the PMIB and the Treasurer's Office are the technical experts who oversee investing in the state's reserves. They have the proper staff, expertise, and infrastructure built to manage these type of programs effectively. And I believe the more education on this has helped alleviate a lot of those concerns from last year. Since the Kansas Housing Linked Deposit Loan Program is not being utilized, we ask for you to authorize the State Treasurer's Office and the PMIB to repurpose those dollars to fund this new program. We are not eliminating the housing program. That was also another concern, because we still believe there is a need for it, but changes will be needed to make it work. We have already begun those preliminary discussions and with Treasurer Rogers and other state lawmakers, and we look forward to working with you all on that in the future. As we all know, housing is a major need in our state. This new linked deposit loan program proposed today is not unique to our area either. Oklahoma has a similar program with $225 million available. Iowa has $108 million available. And Missouri, at the end of its COVID legislative session last year, increased their program from $720 million to $800 million. They did it because they know it works and has been proven to work. It is merely taking state reserves, taxpayer dollars, and investing those directly back into the Kansas economy. Loans for these programs will be authorized for up to the length of 10 years with a maximum individual loan limit of $250,000. Truly ensuring that these loans will be used for small businesses. Participating financial institutions would be responsible for each loan's underwriting and assume all the risk, therefore no risk to the state at all. Kansas financial institutions repay the state on those deposits at a floating rate 2% below the market rate with a floor of 0.25%, which is where it would be today with the interest rate environment. 0.25% can also be referred to as 25 basis points, a financial term you will hear in this committee. A basis point is simply 1/100th of a percent, or 0.01%. You are going to hear that term a lot in this building. Those reserves right now currently being invested by the State Treasurer's Office and the PMIB that we're talking about using are only earning 0.13% or 13 basis points on the open market. So this legislation would guarantee a larger return than what the state is now getting on those investments. The return on those investments was also another concern from last year, that we don't want to put state reserves in jeopardy. I believe and hope more education on that fact, that participating financial institutions assume all the risk and guarantee a larger return, not only in basis points, but also in our state's economic activity, has alleviated some of those concerns as well. We believe now is the time for Kansas to invest in our state's economic recovery by encouraging impact investing. Impact investing means investing in companies, organizations, and funds to generate a measurable social impact alongside a financial return. This is a term those in the economic development sector know very well, and one of which I have learned from them on and share their views that it works. If you look at the first attachment in my testimony, only 0.3% of the $4.8 billion in reserves, and this is the one with the pie chart, 4.8 billion in reserves, only 0.3 is being invested in Kansas banks right now, with a large majority of these funds invested out of state, such as places like Toyota Motor Company, ExxonMobil, and Bank of Montreal. You'll see on the second page after the pie chart the list of investments. Now, I do not fault the PMIB for their investment strategy. I'm not saying that at all. They have done a fantastic job, and their goal is to get the largest return possible and have a strong record of doing so. Today, what we're saying here is to bring some of that money home and support the communities we all live and work. We all know from our economics class that a dollar rolls over in a community 7 times before it leaves. We believe it's time for Kansas to invest back in itself. You will hear from Treasurer Rogers later this morning. I appreciate working with his team and him over the last 2 weeks on some suggested language to ensure these funds are deposited in financial institutions and businesses that have a presence in Kansas. That is absolutely our intent, and we are currently working with revisers and his staff on what we believe are friendly amendments to this legislation. The second piece of this legislation, are also coined the compromise piece of legislation between the Heartland Credit Union Association and the Kansas Bankers Association. We worked very hard on this compromise. And like I stated earlier, it has been vetted very strongly and it has been around for a long time. Is everyone 100% happy? No, not necessarily, but that's what makes it a compromise. An effort that those that were around last year know very well. There's language that we agreed to as well that we had previously worked very hard to put in statute, but now are deciding to change it and repeal it in the name of competition and compromise. HB 2069 would establish a targeted tax exemption that will lower interest rates for agricultural real estate loans from banks and savings and loans operating in Kansas, and create an incentive for rural housing development across Kansas in communities with 2,500 or less. It will provide immediate financial relief to Kansas farmers and ranchers struggling with ongoing low commodity prices by enabling community banks to offer more competitive interest rates on long-term ag real estate loans and rural housing loans. Unfortunately, the number of farm bankruptcies in Kansas continues to trend upward, and it was reported recently that 40% of farm income last year was government payments. A recent Federal Reserve study that concluded, and I'm quoting, "Government payments in the agricultural sector are likely to limit the severity of financial stress among farm borrowers in the coming months, but uncertainty about longer-term prospects is likely to remain elevated." That is extremely concerning, especially if those payments go away or are reduced, which is another reason why we need every tool in the toolbox, specifically long-term ones, because I do believe there's a void there, which is to help our fellow Kansans. And that is precisely what this legislation does here today. HB 2069 also expands the state chartered credit unions' field of membership statutes. It allows them to increase where they can provide services from the previous cap of 1 million people in one metropolitan statistical area to 2.5 million people with no restriction. This was a big piece for us to give up since we fought hard for that current language, excuse me. This was a big piece for us to get since we fought hard for that current language. But this expansion will allow for more access to credit and more competition for all Kansans. They will be able to serve pretty much the whole state. We believe that is a good thing for competition, and Kansans will benefit. The targeted exemption also mirrors what the farm credit system currently has and would allow our banks to provide the most competitive interest rate environment for our rural communities and ag sector. In the end, Kansans will benefit from this competition. I understand that there will also be another friendly amendment being suggested by the farm credit representative to ensure this exemption does not go further than theirs. We are good with their suggestion. As we have always stated, we have never wanted to go further than their exemption. So once again, we see a friendly amendment. Like I stated earlier, both of these proposals will help address some of the economic impacts caused by COVID-19 by implementing long-term solutions. It will help revitalize rural Kansas communities, benefit all Main Street and agricultural borrowers with competitive interest rates, and maintain local access to credit across the entire state to satisfy all Kansans. At this time, I would also direct you to the second attachment of my testimony, to a coalition of groups supporting HB 2069 and or Senate Bill 15, as it's referred to in the Senate. And it also explains the key points and also has some nice graphics. Some have submitted some additional testimony, and we thank their coalition for their continued support of this very important legislation. U.S. policymakers are strategically positioned to assist small businesses, including farmers and ranchers, at this critical moment in our state's history. Our farmers and ranchers and small business owners will need long-term solutions to get through this crisis, and you can and should have a role in providing those tools. We appreciate this committee's time. We appreciate this committee's work and consideration of HB 2069. And Mr. Chairman, I will stand for questions at the appropriate time.
Any questions from the committee? Representative Hoheisel.
Thank you, Mr. Chair. First off, if anybody that's watching online, any of the representatives have questions, go ahead and raise your hand virtually, and we'll get you called upon. Alex, thanks for being here today. I just wanted to get clarification. The treasurer has proposed 4 different amendments, and you guys are fine with those 4 amendments?
The treasurer has outlined 4 different concerns. One regarding residency, one regarding, making sure this is targeted to businesses and financial institutions that have a presence in Kansas. Absolutely, we're good with that. And there's a second part of that too, to allow some language for the farm credit system as well, because that, I believe, was just an oversight on our part. The third concern was regarding a review process for this legislation. We have proposed an amendment to the Treasurer's Office that would implement a review of this program every 2 years. The fourth was talk about adjusting the rates within the linked deposit loan program. Right now, those rates are recalculated every year. In Missouri, they're able to lock those down for longer terms, 3, 5 years. We are still in discussion with that. We're not in disagreement with that with him. We do believe that would be a helpful matter, but the Pooled Money Investment Board definitely has a say in that on how they calculate those rates, and we don't want to step on their toes by any means on that. So yes, bottom line, the 4 concerns that the treasurer has, or I wouldn't consider them concerns, I would just call them suggestions. We are working with him and are good with.
Okay, and just on that, the rate is recalculated the first day of the new year, correct?
Correct. And I know the treasurer is going to testify later today, and I believe he also has Shauna Wake on his staff available today. She truly is the technical expert on the linked deposit loan programs. So those type of questions, I can answer them, do the best I can, Mr. Vice Chairman, but she is the one that I know is going to be 100%.
Okay. Thank you, Alex.
Sure.
You see any other questions out there?
Yes, Mr. Chairman.
Yes, Representative Baker.
Thank you, Mr. Chairman. Sorry, I waved my hand, but my video is not on. So, Alex, that's very interesting testimony, and as somebody who used to serve on a farm credit bank board, this bill raises several questions. Number one.
that was the burglar alarm.
Okay. So back to my questions. So what is the status this year of the farm economy? All my friends that farm and ranch, they appear to be doing pretty well. Is that a fair statement?
It depends on how you would look at it, Representative. Was the harvest a good year last year? Yes. Did commodity prices go a little higher? Yes. But you'll actually hear from a farmer shortly after me that will talk about being a farmer that, 4 out of 10 years are profitable. So once again, I would look at this issue that I wouldn't look at it in the short term because it is volatile and it does evolve. The proposal that we're presenting here today would help put in processes for long-term solutions to help that farm economy. And 40% of government payments being the income for the farm economy, I don't know necessarily that is a good thing or not. But yes, last year was a good harvest, but who knows what this year is going to bring. We did have concern early on in this testimony last year that some of our bankers that testified were concerned that some of their ag producers weren't going to be able to cash flow by the end of the year in 2020, and some of them weren't cash flowing at the beginning of the year. Now, the farm did have a good year, and I'm definitely not an ag expert, but once again, this comes back to long-term solutions to help them when things do go south. And on the other side of things, not just ag, but small business, our bankers have never, they've always said it's not the first quarter of 2021. They testified at the economic recovery hearing last summer. It's not the second quarter of 2021. It's what happens when all the short-term solutions run out. What happens when the Paycheck Protection Program runs out? Now, the second round of PPP has been great for the ag economy, ag producers. They did make some modifications that would allow the ag sector to take better advantage of that. But what happens when that's over? What happens when unemployment benefit, the extended unemployment benefits run out? The economic injury and disaster loans go away. That's our concern, is when those short-term solutions go away, what do we have set up to protect long-term?
Okay, Mr. Chairman, I have a couple more questions. Is that okay?
Yes, Representative Baker.
Okay, so being you brought up the loans that were made to the PPP loans this last year, all the banks that originated those, they received a fee for loan origination fees. Do you have what the total number of dollars they received were last year for the banks?
Representative, I do not have the total number, but I would like to make one clarification. All financial institutions that provided PPP loans were provided an origination fee. It was either 1%, 3%. It was a sliding scale. And I can tell you that all financial institutions, what they're doing with those origination fees, they do not cover the cost of servicing those loans, one. Secondly, they are taking those funds and putting them into their loan loss reserves to prepare for the worst.
Okay, and then my last question, I could ask 100 more, but I'll yield to everybody else. My last question is, so from my days on the bank board, we always kept track of what our percentage of equity was in land loans, and I'm sure your financial institutions do also. Can you tell us what the equity position is in land ownership in the ag loan sector?
Representative, I do not have that answer, but we do have some bankers that are here today and willing to testify, and then I can also do some research after this hearing to get back to you.
Okay, well, I know from the Farm Credit Board, I remember what we had in those equity loans, and our land loans were the lowest risk loans we had. The operation loans were separated from the land loans, and the land loans were in pretty good shape. So I'll be interested in, and I know Treasurer Rogers is a past Farm Credit person also, so I'm sure he'll have some insight on that. So we'll look forward to those answers also. Thank you for your answers.
Thank you, Representative.
Any other questions? Nope. Well, Alex, thank you. And one thing that I'll point out when we talk about the fiscal note, there was one included in what was emailed out to you today. And as at least I read through it, it looked almost exactly the same as what it was last year.
Can I address that? Actually, I meant to address that in my testimony. So the fiscal note, believe for fiscal year 2022 is $2 million. In fiscal year 23 moving forward, it's $3.9 million. I want to be clear, though, I do not believe that is straight a dry cut to revenue. When you're talking about the economic impact of helping these people survive and keeping these people paying taxes, as well as the economic recovery program of putting $60 million into our economy, I do believe there is an economic benefit that does counter that fiscal note. How do you calculate that? I have no idea, Mr. Chairman.
As I remember last year when that came up, there was about the 2 million and the 3.9, which was the same, and then the anticipated could be about $10 million flowing into the hands of the borrowers from the reduced rates. So you got there, it was about the $6 million a year that was the difference. I mean, that it flowed back in. Is that still, that gets up to your 60 million in 10 years?
That is still our estimates, as well as the doubling the return on the state reserves. Right now, like I said, they're getting 13 basis points. They're going to be guaranteed 25. So the state is going to earn more on their return than they're currently getting now.
Okay. Thank you, Alex.
Mr. Chairman, thank you, committee.
And we'll crank ahead so we don't get behind here. Our next proponent that I have is, that I show is Kathy Schwartzfeger. Hope I'm halfway close there, Kathy, Chief Credit Officer, Bank of Truscott, and she will be appearing remote.
Good morning. And you were very, very close there, Chairman Kelly, but good morning to Chairman Kelly and members of the committee. My name is Kathy Schwartzfeger, and today I appear on behalf of the Bank of Truscott in Salina, Kansas. Thank you for the opportunity to testify today in support of House Bill 2069. To give you a little backstory on my bank, the Bank of Truscott is a community bank that was founded in 1887. We have 5 locations in rural Kansas and provide financial services for the communities of Truscott, Lincoln, Lindsborg, and Salina. Our primary lending focus has always been and continues to be agriculture, small business, and residential real estate. Prior to serving in my current role as Chief Credit Officer at the bank, I was an ag and commercial lender at our Lincoln branch. I still reside in Lincoln, where my husband and I also own a masonry business. So not only do I understand how much this legislation impacts my bank and the customers we serve, but it hits home with me personally as the owner of a small business trying to make it work during these challenging times. Growing up on a farm and feedlot just outside of rural Tipton, Kansas, I personally understand the stress our ag producers experience. Many aspects of their operation are out of their control, but one area that they can try to have some type of control over is working with a community bank that can give them access to fair, low-cost credit. Granting access to low-cost credit to not only ag producers, but also ag-related small businesses such as local independent grain cooperatives not only helps to ensure the viability of their operation, but to the entire communities they serve. I think we all are aware of that in a rural community in Kansas, if the ag producers and ag businesses succeed, there's a domino effect as those profits flow from those businesses directly back into the communities they serve. Right now, community banks are very busy handling the next round of Paycheck Protection or PPP loans. Serving the small business of our communities with PPP loans or the Economic Recovery Linked Deposit Loan Program that is part of House Bill 2069 may make the difference in whether or not that small business survives. In the first round of PPP funding, our bank made a $280 PPP loan. Let that soak in, not $280,000, but $280. I can tell you that $280 PPP loan made a difference to that small business owner, and because of that loan, they are still open today. We're proud of the impact we've been able to make in our communities by providing these types of low-cost loans, but we can't do this alone. Programs such as the PPP loan program are only a short-term fix, and they can't help everyone. If a self-employed business owner without any direct payroll expense did not show a net profit on their 2019 or 2020 Schedule C, they're not even eligible to get a PPP loan right now. This bill presents solutions for all businesses for the long haul. My bank currently utilizes the Kansas Agricultural Production Loan Program to primarily fund carryover debt operating loans for our ag customers. We're in the business of managing risk and pricing accordingly. Without that program, we would not be able to offer low-cost solutions to those challenged ag credits. Being able to offer that same type of an option to our small business credits that have fallen on hard times could make a difference in whether or not that business survives. In closing today, community banks are the economic lifeblood of our rural communities. This legislation would allow us to offer lower interest rate loans for the businesses we serve, as well as assist borrowers with their home loan needs in rural communities. This in turn promotes business growth and gives banks an incentive to extend credit to those businesses and individuals that are currently struggling. Thank you for giving me the opportunity to speak today, as this is an imperative issue for all of Kansas. I urge you to vote in favor of the passage of House Bill 2069. Thank you.
Thank you, Kathy. Are there any questions for Kathy? Okay, don't see any questions. Thank you very much. And we will go to our next proponent, and also live and in person, Scott Snyder, on behalf of Adam Mills, President, Kansas Restaurant and Hospitality Association. Welcome, Scott.
Association today. Our view of government's changed a lot in the last year, and we look at everything through the pandemic and how it's impacted our members, how it's impacted their futures, their families. And so I'm going to put this testimony in that context. And I think we come to the session this year knowing that our laws are insufficient to deal with the pandemic, the situation. The laws got stressed, and I think some of them are very flimsy. Some of them are just built on stilts. And we've got several examples of how this bill would actually assist, would have assisted, still can assist in some of those situations. One example is the Belmont, which is a wonderful restaurant, new restaurant out of Wichita. Years prior, they took out a personal loan. They're wonderful operators who came back to Kansas from Phoenix, remodeled, a really cool place down in College Hill in Wichita. And right when their loans, come due, the pandemic hits, and they have to decide, should we open, should we close? We've already paid hundreds of thousands of dollars in construction taxes. We've already got this loan. What do we do? Their decision was to open. So fast forward, they can only open after that first month shut down with the limited capacity. They can't really pay their bills, quite honestly. Every day they're open, they lose money. PPP comes out. Well, they don't have a prior history to base the reduction on from the previous year. It's those types of situations where this would have been really good to have last year and that we testified on. There's another example, Doodah Diner out of Wichita is a cool place. They just spent another $700,000 remodeling, expanding actually, because they're a high capacity place. Well, their capacity was throttled. How do they then go rework their loan and rethink it? Because now the stress of the reality of the pandemic is even larger. I would encourage you to look on page 3 of my testimony. It's last year's testimony, and as you guys go through, the legislators go through the session, there are several ideas in there that we presented in the linked deposit loan testimony of cliffs that we identified, and of course they're actually happened. Businesses had to decide, should I pay my property tax or should I pay my employees? Should I pay my sales tax because I owe half of it based on last month's income when I don't have any income this month? All these businesses had to make these decisions, and I think the reason we're up here today is, one, this is a really good idea, but two, what it would do for our small businesses is create certainty. It's a place that they could go, in addition to the places they already go to their banks, and figure out another solution to the problem that was created by, quite honestly, the pandemic. So We support this. Happy to stand for any questions. We're going to be around the State House all session with a bunch of things that we've identified today and some other issues. So appreciate your time and attention to these matters.
Thank you, Scott. Any questions for Scott? Representative Hoheisel?
Thank you, Mr. Chair. Thank you, Scott, for being here today and referencing the Doodah Diner. I love, my wife and I love the Doodah Diner. You have in your testimony some data, nearly 1 in 6 restaurants is closed either permanently or long-term. Do we have any updated numbers on the amount of restaurants, at least in Kansas, that will not be able to open back up?
That's a really good question. The National Restaurant Association did a series of these surveys, and a lot of them, they drove down into the individual states. The survey that I'm referencing here is just a national survey. So I don't have that specific data. I've presented some in the past, and they've always kind of tracked with the national data. So I'd expect that number to remain consistent in Kansas. I do know when we testified last May, and it's in my testimony from last year, we lost $325 million in the month of March, laid off 64,000 employees. And while things, we can go to restaurants now, the economics haven't gotten any better. And I do agree, and some of our bankruptcy attorneys also agree that we're not out of it. To the extent you took out a PPP, to the extent that you've leveraged every bit of life capital you've got, what's it look like in the next 3 months? That's when you're going to start seeing some of the stress really happen. So appreciate the question.
Thank you, Scott. Thank you, Mr. Chairman.
Any other questions? No. Thank you, Scott, very much. Our next proponent, Greg Meyer, ag producer, and Greg will be remote from Meyer Farms. Welcome, Greg.
Thank you, Chairman Kelly and members of the committee. My name is Greg Meyer, and I'm testifying on behalf of Meyer Farms in Marysville, Kansas. We raise dryland corn, soybeans, and have a cow-calf herd. As an agriculture producer, I've witnessed firsthand how tough financially and mentally things can be year in and year out. 2020 was definitely no exception. What would this bill do for our farm? It would save us money, have access to more credit, lower stress, and help our local communities. For farmers and ranchers, each year is different. On average, 6 out of 10 years you do okay. It's the other 4 that you need to make up for. And as you know, it can be Mother Nature, the markets, world issues, or input costs that make each year really different. Just in the last week, soybean prices have dropped roughly $1 to $1.50, and corn has dropped 50 cents a bushel. And that drop is because of world issues with Russia, China, and South America. But our inputs are rising usually each and every year, which fuel's up this year, fertilizer's up, steel cost is up. If this bill would help us make up some of the difference on the years we don't do as well on. It would also give us more tools to manage our risk each and every year. And like Dave was asking a question earlier, 2020 turned out to be a better year for farmers than we expected. That is true. But government payments played a huge role in that. And we all know that they can't keep the government payments up like that. So this is a long-term deal that we're looking at. So in closing, I thank you for your time considering this especially important issue for Kansas. And when you take action on HB 2069, I urge you to act favorably in its passage. Thank you.
Thank you, Greg. Any questions for Greg? Don't see any. Thank you very much for being with us this morning. Our last in-person or remote proponent, Shane Haynes, President and CEO, Heartland Tri-State Bank. And Shane is remote.
Yes, can you hear me?
Yes.
All right. Thank you, Chairman Kelly. Members of the committee, thank you for holding this hearing regarding equal credit costs for Kansas. I am Shane Haynes, President, CEO of Parkland Tri-State Bank in Elkhart, Kansas, and here in support of House Bill 2069. My goal is for this committee to understand the importance of community banks, especially I'm just going to tell our story of our bank, and while I'm proud of our story, I don't think it's necessarily unique, and I think it's a good business model, especially for community banks in Kansas. Our bank is owned by a number of local shareholders who came together to keep a local bank in our small community. Our shareholders include farmers, ranchers, teachers, gas company employees, retired individuals, and even just a few bankers. I know they expect a return on investment as some cashed in CDs, some moved retirement accounts to purchase shares. I can also say without hesitation that some were motivated to keep the bank locally owned. 2 years ago, I approached those same shareholders with an opportunity to acquire 2 additional banks in rural communities in which that bank was the only financial institution in town. During one of my visits to the new branches, an older gentleman who also happened to be the mayor offered me some advice. And he said, for any rural community to stay alive, they need 3 things. They need a grocery store, they need a school, and they need a bank. And he thanked me for buying the bank to keep their town alive. I shared the story with a branch manager who then said he had not been a customer of the bank until we made that acquisition, and felt if there was someone willing to keep the bank alive in the community, he needed to support that. In addition to keeping banks in rural communities, we can increase employees. When we purchased the bank, there were a total of 16 employees. Today, we have 28 employees across 4 locations. I told my story to explain why this bill is important to my bank and, frankly, all community banks across Kansas. In all but one of our locations, we are the only bank in town. Or said another way, if our bank didn't exist, there would be 3 rural communities that have no financial institution. I'm proud of our bank structure and ownership. However, without changes made, I fear this structure is not sustainable. Community banks are that primary economic driver in most rural communities. It's not a fact on many rural communities if they didn't have a local bank presence. How many high school scoreboards, county fair donations, rec team sponsorships, water bottles purchased, scholarship donors, civics organization members, I could go on and on, you get the idea, are different without the support of a locally owned community bank and its employees. The passage of House Bill 2069 is critical to the accomplishment of 3 objectives. Number 1, sustain and revitalize rural Kansas communities. Number 2, benefit all Main Street and ag borrowers. And number 3, maintain access to local credit across the entire state. This bill will encourage banks to either stay in a rural community or be willing to invest in a rural community. This bill is about sustaining rural Kansas from both a customer and business standpoint. My ask is for you to support House Bill 2069. I respect your service, appreciate the time and sharing today, and now I'll try to answer any questions you might have. Thank you.
Mr. Haynes, any questions for Mr. Haynes? Thank you very much. Committee, that's our last in-person proponent. I draw your attention to written testimony only from Alan Popelka, Vice President, Kansas Livestock Association, Randy Stuckey, Renew Kansas Biofuels Association, Mark Toom, Vice President, Governmental Affairs, Kansas Association of Realtors, Eric Stafford, Vice President, Kansas Chamber, and Dan Murray, Government Affairs, National Federation of Independent Businesses. That's who we have listed as written only proponents. Is there anyone else that desires to speak as a proponent to House Bill 2069? Seeing none, this will officially close the proponent portion of our hearing on House Bill 2069, and we will now open the neutral portion of our hearing on House Bill 2069. And first up, remote, is Lynn Rogers, Kansas State Treasurer. And welcome to the committee, Lynn.
Thank you, Chairman Kelly and committee members. It's a privilege to stand before you, even virtually, as your 41st treasurer appointed by the governor. I wanted to just highlight, besides the linked deposits that we're going to talk about today, the professional staff at the treasurer's office also handles bonds for municipalities, cash management for the state of Kansas, and unclaimed property. So encourage you all to stop over sometime and visit. We're here to talk about House Bill 2069. At this point, we're neutral. We do feel like there needs to be some friendly amendments, as Alex mentioned. Just to give you an overview, currently we're getting about 13 basis points through the PMIB, or 0.13%. This program would allow us to loan that to financial institutions at 0.25% or a quarter of a percent. They in turn could then add up to 300 basis points on it, which is much lower than what a normal rate would be. Most normal operating loans would probably be in the 4.5% to 5.5% range, depending on the credit. The financial institution makes the decision on the credit. And as mentioned by Chairman Kelly, there is no credit risk to the state of Kansas. We would reprice that once every January. We have been doing linked deposits, the agricultural program, since the year 2000, and the housing since 2008. Currently, there's about 18 million used on the agricultural program. And as mentioned, the housing program is not used. But this bill does not suspend that. That would continue to keep 60 million for housing, 55 million for the agriculture, and an additional 60 million for this linked deposits. So that's one of the reasons on our fiscal note we would need to add another person. My hope is that we revitalize the housing program. It is a very competitive rate if you look at it for remodeling prices. It isn't for brand new mortgages. The weaknesses of this bill currently, it is not limited to Kansas residents and Kansas businesses. And we would like to see that just like the agricultural program and the housing program, where that is limited in that way. Currently, the financial institutions, the banks and the credit unions can participate if they have either a headquarters or a branch of another credit union or financial institution. We would like to see that for the farm credit associations as well. There's currently 4 farm credit associations in the state. Some are branches, some are headquarters. We want to make sure that all of those are eligible for this program. We would like to make sure that we define this businesses as small businesses. $250,000 should probably limit it to smaller businesses, but it doesn't necessarily say that. So we're concerned about that. Also, we feel like there needs to be a review or a sunset or some kind of a thing where the treasurer's office and the legislature comes back and looks at this in a couple of years to see how it works. If approximately 240 businesses each ask for $250,000 on day one of the program, it is totally used up until there are pay downs and payoffs. And so we also think that the economic recovery probably, we hope, will be done or will be over in just a couple years. But there is need, and I think there is a desire, as mentioned earlier, that this could be a great program for the future to help us compete against Missouri. They currently have a program, as was mentioned. One of the things I like about their program is that the bank financial institution has to put what the normal rate would be and then compared to what the state rate would be, so the lendee knows what kind of benefits the state is bringing to them. So at this point, I would stand for questions whenever it's advisable. And also with me on the call is Shauna Wake, our Director of Fiscal Services. Anything technical, she would be able to help us answer as well. So thank you for allowing me to speak today.
Thank you very much for being here. And are there any questions? Representative Hoheisel.
Thank you, Mr. Chair. Thank you, Mr. Treasurer, for being here today. It's always great to see you. One question is. With the proposed amendments, would that move you guys from neutral to a proponent?
We would be in favor of the linked deposit program of the bill. We really don't have an opinion on the other elements of the bill at this time.
Thank you.
Mr. Chairman?
Yes, Representative Baker.
Okay, thank you. And always good to see you, Treasurer Rogers. We go back a long ways. So my question is, and I own a supermarket in these rural towns for 30 years, so I'm pretty well aware of the stress of trying to do business in small towns, and it's not easy. It's surely a numbers game. But in some of the testimony we've heard, some of it written and some of it verbal, there are some businesses in rural areas that are doing really, really well, and a lot that are not doing very well. So I guess my question is, would there be a possible way to target these funds towards businesses that really do need the help, instead of those businesses who are enjoying great success? I've seen many times over the years where certain industries have figured out how to take and leverage these funds to grow larger and take out the smaller operators who are struggling. So I think when we go to use state funds for that, it would be nice to see those funds targeted towards those individuals that are truly struggling. Is that something that would be a possibility with these funds, do you think?
Mr. Rogers, you're muted.
Mute myself twice. Sorry about that. As I understand it, in terms of how the bill is written now, there is not a restriction in any way of how it's used. It would all come down to the package that's brought to us by the financial institution. The agricultural program is limited to those that have a debt to asset ratio of 40% or greater. I don't want to substitute the state treasurer's expertise on the financial side for the local lenders' credit worthiness. They're the ones that are taking the risk from that standpoint. But I do think if the legislature intends these to be for economic recovery, I think you could approach it in such a way it would help us have a better understanding if you had a discussion as to who you really wanted these funds intended for.
Thank you.
Are there any other questions? If not, we will try to get in our we'll try to get in the. Representative Poskin, you had a question? Okay, we'll try to get in.
Representative Poskin, you are muted. If you could unmute yourself.
Yes, thank you, Mr. Chairman. Treasurer Rogers, I understand that the state money is not at risk in the loan itself. What happens if the institution, the financial institution, goes under? Does that leave the state money at risk?
No, thank you. That's a good question. I should have, if a bank would want a loan, we would loan them that $250,000. The first $250,000 are insured by the FDIC, the other institutions, credit unions. Anything over the insured amount would require in protection so that we would be covered. Currently, some of the ag banks that are using the ag program have $4 or $5 million that they've borrowed. We would have securities in excess of that dollar amount to protect us, and then that is one thing that we do reprice and make sure that's part of the expertise that the Treasurer's Office provides to make sure that that money or that funds can be covered if there was a problem with the bank.
Understood. Thank you. Treasurer Rogers.
Okay, thank you very much, and we're going to go ahead. Does everyone have another, since we don't have session today, does everyone have potentially another 15 minutes to go? We got started a little late getting all the technical things done, and I'd like to give everyone an opportunity today. Next neutral that I have is Stephanie Mulholland, Heartland Credit Union.
Am I on now? Okay, thank you. My name is Stephanie Mulholland. I'm here on behalf of Heartland Credit Union Association. We represent the more than 690,000 Kansans that belong to their credit unions. Just a quick background on us. Credit unions are not-for-profit. We're member-owned co-ops, similar to your local ag and electric co-ops. So our members range from the smallest being Catholics United Credit Union, which is operated by the church's parishioners in Hutchinson, all the way up to Meritrust Credit Union in Wichita, which is our largest. They were formed by the aircraft industry employees and serve the employees of Spirit Aerosystems today. So House Bill 2069, as Alex mentioned, is compromise legislation that resulted from the good work of the chairman and other members of the committee last year, as well as HCUA and the Kansas Bankers Association. As part of that compromise, we are here to submit neutral testimony. I know we've talked a lot about economic recovery today, so I'll be brief. That I know over the last 10 months, credit unions, banks, farm credit alike have all stepped up to really be a part of the economic recovery as much as we can. Besides PPP loans, that has included for credit unions zero interest loans and low interest loans to help people get by until their unemployment benefits arrived, or if they needed a 90-day emergency loan to get through the beginning of the pandemic. We've also done a lot more of free financial counseling, which we do all the time, but we've definitely seen an uptick in the need for that. And last year we did more than 95,000 skip-a-pays, which is the option for Kansans to temporarily skip payment on a mortgage, on a car loan, on a business loan, on a credit card during the pandemic if they needed to help with cash flow. So we do support the link deposit program that's in this bill as one more way to make sure that these small business owners can access affordable financing. We also support the field of membership changes that are in the bill, which we hope will lead to increased competition and consumer choice. Last session, in prior versions of this bill, credit unions have expressed their concern about the tax exemption. I did want to make the committee aware of what that concern was so that you would know going forward in future legislation. As not-for-profit entities, credit unions are taxed similarly to other not-for-profits in the state, while banks, which are for-profit entities, are taxed in line with all other for-profit entities. Under this bill, for-profit banks would instead be taxed along the line of not-for-profits without being required to follow the same rules as the not-for-profits in the market. Our members remain concerned about the double standard that this type of policy change creates if it's expanded in future years. In my written testimony, I've included some of those rules that credit unions are held to as part of their tax status, but I think the most important one being that we're held accountable for returning the profits to the consumer. So last year, in the first 3 quarters of last year, we returned more than $119 million to consumers through lower loan rates or higher interest rates on savings, or sometimes through direct dividend checks. So we do believe that tax fairness rests with holding all entities that want to be taxed along the lines of not-for-profits accountable to the same rules and restrictions as not-for-profits. Again, we are neutral on this bill, and I appreciate very much the opportunity to have come to a compromise. And thank you, Mr. Chairman, for the chance to comment today. I'd be happy to take questions.
Thank you, Stephanie. Are there questions for Stephanie? No question. Thank you, Stephanie, very much. Our third neutral is Kevin Swain, High Plains Farm Credit, and Kevin is remote. Welcome.
Good morning, Mr. Chairman. Can you hear me okay?
Yes.
Okay. I'd like to thank you and the members of the committee for this opportunity to present today. My name is Kevin Swain. I'm the CEO of High Plains Farm Credit in Hays, Kansas. In addition to working for the farm credit system for 25 years, I'm also a 5th-generation Kansas farmer from Bogue, Kansas, and committed to Farm Credit's mission to serve all segments of agriculture. I'm here on behalf of the Farm Credit Associations of Kansas, 4 independent financial services cooperatives that finance agriculture. Each of our associations is part of the national farm credit system with retail offices across the state and services provided to farmers and ranchers in every county. Our 4 associations provide over $5 billion in financing to over 21,000 customer owners located in all of 105 of Kansas counties. The 4 associations, along with our partners at CoBank, were able to pay back more than $74 million in cash patronage to farmers and ranchers in Kansas in 2019 that is taxable to those farmers and ranchers. Farm Credit's unique cooperative structure means that customer owners who serve as our directors are living, working, and raising their families in rural Kansas communities. They're deeply invested in the success of those communities, are interested in finding ways for Farm Credit to contribute to that success. I'd like to just maybe skip to the 3rd page of my written testimony and speak directly about the proposed amendment that Alex referred to in his testimony from the Kansas Bankers Association. You've received testimony that the intent of the privilege tax deduction is to put other lenders on a level playing field with Farm Credit. House Bill 2069 is attempting to align the privilege tax exemption with the federal tax exemption for federal land credit associations. Farm Credit pays taxes on its short-term lending, and federal land credit associations are the long-term real estate lending portion of our Farm Credit associations. This is the reason why the definition in the single-family residence includes the population limit of 2,500 or less. Farm Credit regulations provide for rural homes with the same population limit. However, the definition of qualified agricultural real estate in House Bill 2069 goes beyond the Farm Credit's federal tax exemption. To comply with the intent of leveling the playing field testimony that's presented to the committee, we've suggested some language that would align with Farm Credit Act's regulations, sections 61440, 30, and 614 4200. Those potential refinements were underlined in my testimony, but would address the term of the loans should be 5 years, no less than 5 years, and no more than 40 years. The loans must be secured by a first lien position in real estate, and the outstanding loan balance after the advance is less than 85% of the appraised loan value real estate. In conclusion, the ag economy in Kansas is still searching for stability after the pandemic. A long run of slumping commodity prices and weather stress. As agriculture economy moves through the cycles, Farm Credit Associations of Kansas are dedicated to supporting Kansas farmers, ranchers, and rural communities. The Farm Credit system has been and will continue to be a strong advocate for farmers and ranchers in Kansas. I encourage the committee to continue to look for ways to provide direct benefits to our rural communities and consider federal regulations as you evaluate the changes to Kansas regulations. Thank you for the opportunity to provide these comments and observations, and I'll stand for questions when appropriate.
Mr. Swain, any questions? No questions, so thank you very much for being here today. And that is the end of our neutral testimony in person. I do not show any written neutral testimony. Does anyone else desire to speak as a neutral on House Bill 2069? Seeing none, this will officially close the neutral portion of our hearing, and we will open the opponent portion of our hearing on House Bill 2069. And the one speaker remote that we have that's going to appear is Brandy Miller, President and CEO, Kansas Cooperative Council. And welcome, Brandy.
Thank you so much. Can you hear me okay?
Yes, very well.
Wonderful, wonderful. Thank you. Well, good morning, Mr. Chairman and members of the committee. Again, thank you for this opportunity to speak with you today regarding the Kansas Cooperative Council's opposition of the privilege tax exemption component of House Bill 2069. Certainly wish I was able to join you in the room, But appreciate this virtual option as Mother Nature had other plans for me this morning as I ventured towards Topeka. As the chairman stated, my name is Brandy Miller, and I am the president and CEO of the Kansas Cooperative Council. And for over 75 years, the Kansas Cooperative Council has been working on behalf of cooperatively structured businesses in the state. Many Kansans are members of cooperatives, either through their membership in ag retail, grain marketing, rural electric, financial, or insurance cooperatives. These Kansas are making long-term strategic directions for the cooperatives that they serve. It's the mission of the Cooperative Council to protect the business structure and continue to provide cooperative business solutions for people in Kansas. And even though the Cooperative Council works on behalf of all cooperatively structured businesses, I want to make sure I'm clear that I'm not here to speak on behalf of our farm credit and credit union membership. You've already heard from both of them this morning. But what I do want to focus on is just a few minutes sharing what makes cooperatives unique, especially as it relates to the business structure and the tax exemption component of this bill. So even though co-ops have been in Kansas for over 100 years, and certainly we've seen a lot of changes in that time, the business structure of cooperatives has virtually stayed the same. Cooperatives are structured as member-owned organizations. So when you become a member of a cooperative, you become an owner, and that ownership gives you control through an election of a board of directors, and that board of directors governs the cooperative. When you do business with your cooperative, profits are returned back to you as a member based on use, and those dollars stay local. And as you heard from the credit unions and farm credit, the way that those benefits are distributed back to members is dependent on the type of cooperative that you're a member. As a not-for-profit business, cooperatives are afforded tax benefits and are required to pass those benefits down to members. So depending on the business, this could be through cash patronage, equity, lower interest rates, combination of benefits, or even dividends. So this unique cooperative structure that are allowed. The privileged tax exemption component of Senate Bill 15 would go against long-held precedent by allowing for-profit businesses the same benefits as not-for-profit cooperatively structured businesses without any of the structure requirements that cooperatives adhere to. The privileged tax exemption component of of House Bill 2069 would also create new precedent in Kansas tax policy and jeopardize the cooperative structure that is an important part of not only our financial market in our state, but also our rural and ag economies. Kansas cooperatives has seen the same challenges that the rest of Kansas has faced in the last 10 months. So we certainly are very supportive of the Economic Recovery Loan Deposit Program. It's another way for rural Kansas to gain access to capital. And in addition, we support the expansion of field of membership as this provides Kansans with additional financial options. But as you heard prior to the testimony this morning, the tax exemption component of this bill was introduced in 2019, long before COVID was wreaking havoc on our economy, and certainly was something being considered before we were thinking about economic recovery. The KCC supports a competitive marketplace, but remains concerned that this bill will not level the playing field. It will provide a for-profit company access to the same benefits as cooperatives without adhering to the same business requirements. The language in this bill does not afford the same transparency that cooperatives are required as not-for-profit entities and does not assure that the tax exemption would be passed directly to borrowers. It is why we respectfully request that the committee reconsider this privileged tax exemption component of the bill. Mr. Chairman and members of the committee, I'm happy to stand for any questions and really appreciate this opportunity to stand before you today.
Thank you very much, Brandy. Are there any questions for Brandy as we? No questions. Thank you very much I'm glad we had this ability to do the remote for you.
Me too. I thank you very much.
Committee, I call your attention to written only opponents. Gerald Kimmer, CEO, Pride Ag Resources, David Cron, Skyline Co-op Incorporated, I believe in Ulysses, and Bob Standridge, General Manager, High Plains Co-op. This is all the testimony that I have as opponents. Is there anyone else that wishes to testify as an opponent to House Bill 2069? If not, we'll close the opponent test part of our hearing, and we will officially now close the hearing on House Bill 2069. And committee, we have Wednesday, we're going to have a kind of a presentation on our rural development portion of our committee. The speaker that I hope for from the Kauffman Foundation, they need about another week to get all the clearances, so they'll appear next Wednesday, but this will put us in position to do that. And right now, I'll tell you tentatively, we'll look at working this bill next Monday. And I say tentatively, we'll watch and we'll set what we have. I appreciate you giving a little extra time today. Hopefully we'll be able to start on time, because my goal is always to start on time and end on time. So we will officially adjourn the meeting. Thank you.